Close that door and don't close it and don't go, or leave it open, but don't go in and out.
Two.
Hi, everybody. Dale Pinkert here at TradeGateHub.com. We really have unique insight today to watch Francis Hunt handle things during market hours. You know, Francis, I want to welcome you here to TradeGate Hub again. And you're known as the market sniper. And I wrote that most snipers need a spotter, right? They're a team. And you know, I would apply for the job, but you don't need a spotter because I've interviewed you, I don't know, 8, 9 times, and I have a reputation for remembering things like an elephant. And I really can't remember any of the markets that we've talked about where you've been off base on what's been happening since you and I started talking to each other. So what a great time to have you after the Fed. And I know you want to talk about uranium. So I'm going to try not to interrupt you a lot because that's my reputation. I'm an interrupter. But what's top of mind for you right now? We're looking at Bitcoin, Euro. Okay, interesting, because I always look at it in dollar terms, but what are you seeing here?
Dale, first of all, thank you for having me back. Love being with you and your guys, particularly. Always on spot. We do get things wrong, but we like to look at the big charts and get the macro things right, and that makes for much smaller mistakes when you have the primary biases correctly. I mentioned to you about uranium. In fact, I'm a bear on the energies complex as a whole, and I'm going to come to that. But one of the beneficiaries, because you can always be just this mega doomer, everybody just thinks, oh, you're just a short end of the world, everything. Unfortunately, I feel there is an element of that is part of our times right now. But I also want to highlight things that I assess that's going to go up. So it's ironic we started on the BTC Euro because I was looking at Bitcoin dollar, but dollar's become a bit of the part of the story. So I also make a habit of 360-degree analysis and looking at it on cross currencies. And we had a little structural setup here on the Euro that we felt, yep, this 23.5, by the way, the blue line, and I'm going to make it a little fatter so everybody spots this because it's important, was a neckline on an inverted head and shoulders, and it correlates to the 25K on BTC dollar. So just for those that are not used to seeing BTC and Euro, I'm tying it up for you. And that was a key triggering event for Bitcoin, the 25K dollar pop, and also the 23.5 Euro pop. And we said it's going to make the Euro, we called for 26,000, and you actually made a little bit of overperformance there. You got to about 26,659. Now, I saw Robin Brooke of Goldman Sachs saying, you see, Bitcoin sold off. It just goes to show it's supposed to go down. The Fed was more dovish about future interest rates. And what he's failing to recognize is that in actual fact, Bitcoin had a dip for the right shoulder. So if I go a little bit higher time frame, and on the USD, it fell to just sub 20, and on the Euro, it fell to 18. This was the right shoulder right there. You know, we said the key Francis, level of 20K on Bitcoin.
Okay, I just want to interrupt because I got something out of this 2-week rally in Bitcoin. Because, you know, I talk to a lot of people, and what is Bitcoin? Some say, well, it's an alternate currency. It's blockchain. It's risk on, risk off. You know what it is? During a fear of a banking crisis, it's where flight capital is going to go. It had the strongest performance, outperformed gold, outperformed everything. And I'm impressed. And, you know, I have a hard time understanding value except for using my charts. But the portability and the security you have, if the internet doesn't go down, really came to the forefront in the last 2 weeks.
Correct. And it's important you mention it's still a digitized asset. I don't evangelize and become a believer, but it is. The one thing it has is that it has limits, an alleged limit. Until that is changed or somebody starts messing with it, America had a constitution and it's been ignored. So, you know, these things have a value to a point until such time as people challenge that value. So we don't lose our heads about it. I'm also don't lose my head about the fairy tales about Satoshi. But for now, this is what it's done. And, we saw all of this, and we micro trade on the lower time frames with our macro bias. So it might be worth a while just for the guests to get the big picture just quickly. I'll flash the daily first and move to the dollar because everybody's more familiar with the dollar. But I was just highlighting the euro cross there because we had a smaller structure that meant a little peep more. So here's the chart for the dollar. It's kind of messy because we really work on our charts. I'll take off all the noise for a bit.
Is that a megaphone, Francis, you had up there, that formation?
Yes, I did. I did.
Okay.
And we have real theory on what megaphones mean as well. Many people don't know what to do with it. It's kind of like...
Yeah, it's a broadening top.
Exactly, but it can be a continuation pattern, Dale, and this one is. And the Crete criteria is when are megaphones continuation or reversals? And most people characterize them, as you just stated, that it's a reversal. In actual fact, it's our assessment that this is continuation. So here was your rising wedge. We were known for being continually, ongoingly bearish. I even stopped posting on my crypto channel because the guys hated it. I was saying, no, still more downside. When we rallied to the 25K, we said rising wedge, you're going to spill again. And we've only recently pivoted. And we said when you made the 25 here, there's a likely dip to come. See if I can just get that annoying label to disappear. There's a likely dip to come, and it's probably going to run the key level of 20K and the legacy high of 19,980, I think it was. So you actually had two very important levels running just there. And that's exactly what happened. You could have had the angel trade entry in and around the 20K 19.9s level. And this is why Robin Brooks and Goldman Sachs saying, you see, it's gone down. It's not really a hedge, They're ignoring the fact that things go up in advance on the rumor and sell off on the fact. The Fed day was the fact. And as a result, you got a pushback on Bitcoin on the fact. The buying was the rumor that things were clearly softening as a result. And my main hypothesis, all your guys are going to hear from me today, is that this is the beginning of contagion. This is not a blip where you buy the dip and everything go back up. This is the first stages of contagion. Many people forget subprime.
It was contained. Bernanke said it was contained.
Everything's fine. And then Lehman's happened in 08. But actually, the yield curve inverted in 06. You already had a stall speedy type feeling in 07, around about mid 07. There was quite a few concerns. There was rumors even getting outside in Europe about Detroit and subprime mortgages and all sorts of, the stripper girls with 8 apartments and flipping, and all of this we even knew about it through the gossip chats.
Is the dollar not going to get a bid, Francis, during this contagion and risk off that I think you're talking about? Or are we just going to break down under par and a half and have a continuation move? I mean, I thought it was going to hold 102. And I've been told, and I believe it, if you get the dollar right, you get everything else right.
It's an important question, and I think I'm going to cover it, but I'm going to go a long way around to answering you, if that's all right.
So I'm very patient.
Yes, the anti-fiats are actually winning. So I'm, rather than talking dollar versus another fiat, I'm saying the more interesting category is the fact you want to be anti the whole goddamn lot, because this Bitcoin and gold that I'm talking about. So the non-doomer trades are the longs on Bitcoin and gold. I'm showing you that we are actually calling for a 40K move out of this inverted here. That's a substantial call. And we said, even when you run 19, our expectation is you'll come back out strong. And when you break 25, it's a triggering event for further upside. Is it a surprise that we're stalling at 27.5 when 30K was such a significant level? No, it also coincided with the Fed news. It's absolutely natural. Nothing goes up in straight lines. You'll see now, if I clean my face a little bit there, you'll see this was a bear flag on the way down, Dale. And if you run the midpoint through there, you want your 30K. That bear flag was a 30K bear flag. And so you're going to wind up and gird your loins before you run for that fence. And that is absolutely typical. So pick your point, and you may get a little bit of opportunity to put in limit bids on Bitcoin and pick it on the low end of the range to optimize your entries. but the bias should be long Bitcoin. And it's the same for gold. You should be biased long gold. The anti-fiats are the upside story. Apart from the military industrial complex, which I can also refer to, particularly the European this time, not so much the Lockheeds and the Raytheons, there is very little else I am bullish. So to simplify, which way are you leaning? Let's get the non-doomer stuff out there. Get into gold. The difference is debt and currency exist together. Currency is borrowed into existence. It has a liability. Gold is different. It exists and you own it. There's no liability or T-bill account that goes with it. If you hold it, it's physically in your hand. That's yours. Currency is different. And I'm going to pivot now to the debt markets, and I'm going to highlight how the short-term debt markets really wet the bed, Dale. And this technically...
Go ahead, let's.
Yeah, especially on the short. If you're looking at
there are times in these markets now and then, Francis, at my stage in life where I might need a pamper.
I like it. I'm up for a pamper. I don't need to get too old to be up for a pamper, Dale. I tell you what.
Anyway, I know you're about 40 years younger than me. I'm the oldest guy on YouTube and Twitter, and
God bless you.
I'm still standing, man.
No. Long may it last. Long may it last, because we're all enjoying it. I want to highlight this event. In fact, let's go with the 2 year. And I'm going to de-log that. And what I'm showing you is that is a nasty ass technical event that's occurred there. That is what we refer to as a slap in face. It's part of our jargon. And rather than just trying to be funny, it actually means something. It means the end of a potential upside move. So you were super, super calm and you were working your way up. So that was low vol, there was your little channel, and then wham, this news came out and it absolutely gave you a proper wake-up call. And you can even
said, Francis, that this was the biggest down move in bips in yields since, here's the year.
1987. Yeah.
That's right.
Yeah, no, you got it. I saw that as well. And this was such normal continuation. Everything was hunky-dory with that pullback. These are two different types of events, that versus the falling wedge I just drew before it. So typically what happens, you get a calming period where everybody says, it'll be fine, and you get a small rally, then you get another sell-off, and you actually wind up, and you often get a structure that gives that then leads to a major reversal. Now, you will also know me as the guy that said bonds were a turn on the events of March 2020. In other words, yields went super low. They're never going that low again. And I've called the turn on debt markets. So why am I saying the yields to go down again? They will never go to the lows before. We are in a hyper stagflationary environment, but we are going to get a pullback against this bull market in yields on a demand destroying event.
All right, let me ask you this, and I think this is possible, and everyone thinks, oh, it's good if yields begin to steepen. And I think that we could be coming out of this inversion and that things are going to start to steepen, which is even more perilous for the market, is when it steepens. People think it's good because banks would have a better spread. But when they start going up, that's usually when the pain really gets severe, because you can't finance long term, and the Fed could only control the short end of the market. Right, buddy?
You're absolutely spot on. In fact, I've prepared a chart that actually demonstrates that very fact in all of our recent historical events. So again, let's just take it up to the monthly and show everybody all the major crises that we've had over an extended period. And yield curve inversion, when you get the reversal out of yield curve inversion, that is your great crisis. So the big crisis that came, let's just start with recently modern history. There was .com. You broke on the 3rd of January, but you went into the recession of 01, 02, and you started to come out 03. So the warning is here. You're in the setup for the problem there, but the problem occurs here. Exactly what you're saying. And in the same way, if I highlight this, that was 05. That is January of 05, December of 05, that. And then you broke and you started moving up. This is 07. The real crisis actually hit here, 08. So the This is why this is such a key indicator, and so many people's eyes glaze over when you start talking about bonds. They think it's not a market that means anything to them. You know, equities, they understand. A business, it's doing well, it's doing badly. Currencies is kind of an equity for a country, it's doing well or it's doing badly. You know, in a simplistic sense, we get that. People don't understand the debt system. The debt system underlies the entire currency market. So the holy troika or the sinister troika is debt, which is borrowed currency into existence, and the intermediaries, which is banks, which precipitate and create those loans. So what you're actually getting is a crisis of banks, debt, and currency.
You know what is really frightening to me here, Francis? The previous lows that you talked about, where they started coming out of it, you look at the bottoming action in it, and then you go to where we are right now. The magnitude of that candle compared to the prior two crises, it's the magnitude's got to be 5 times, which to me probably means in a candle like that that's so powerful would tell me that there's a larger problem happening here than at the prior lows.
You're finishing my sentences, Dale, before I have a chance to say them.
Well, you know, I have a camera in your office.
Yeah, exactly. I hope you're not seeing any of the dirty bits. But yes, the harder you smash down, the more volatile and the lower you go. This is of a modern era, one of the deepest. It precedes all the other crises, the Asian crisis. You have to go to Volcker to pass it. It precedes dot-com crisis. It precedes subprime crisis by a massive amount. We went to about 1.2, 1.3 on the inversion here. And this is on one of the Fed's favorite choices. The return move up is so violent that it's quite likely we will cross very, very soon. This is just the month, and the month is not over. So I'm on the monthly chart.
It speaks to velocity. It speaks to velocity.
And the harder, deeper in, the more you forward back out.
And the more people get paralyzed because they don't have time to think about it. Okay. Correct. You can't think. If you don't have your exit plan now, you don't have one.
100%. So this is why my hypothesis, the theme, if you say, what's your theme that you're telling everybody today, Francis? It's that the demand destroying event is knocking on the door and is about to kick it in and come storming goddamn through. And yield curve inversion is showing you that. More violent in, faster out. We've just had the Fed speak. We've had a day to settle down on it. This is turning, and it went deeper, harder, faster. So it comes out deeper, faster, to the upside. And that means your crisis is coming sooner than you realize. So people, again, I'm going to refer to my avatar villain from Goldman Sachs, Robin, who says, well, people should have bought the dip and everything. No, on risk assets, unless you're talking Bitcoin and gold, which have real anti-fiat, we're talking about the failure of debt and fiat system and a loss of confidence, which is why I kicked your dollar question first into touch to cover this at a more macro category stage. Should you be even looking at dollar cross versus euro?
That's what I'm asking myself now.
No, look at gold. So gold has made new highs against the Australian dollar, against the British pound, against the Japanese yen. I mean, a swathe of currencies. And if we take you, because I started with Bitcoin, I've got to deal with the metal heads as well. We've got to look at the precious metals. And it technically broke a very important critical level as well. And that was what we referred to as a big macro flag. So let me just find the gold. That's right. And I will show you that. And it's kind of like a big flag break. But before I do that, let me just show you a couple of currencies. This is gold versus the Rand, new highs on the monthly. Look at that spike. This is gold versus the Turkish lira. Whoops, we've got a bit of a crazy wick in there. New highs. This is gold versus the Indian rupee. This is your emergings, new highs. This is gold versus more slightly stronger currency. So let's take it to the CAD, for example, coming up for new highs, just a whisker away on a very, very impulsive move. How's gold against the Australian dollar? Remember, they're big miners too, the Aussie. New highs. This is an ascending triangle. We were trading this in our community. The 2,800 was a critical level there. You had been rejected there. You couldn't hold air above there. You're a very small little iceberg and rejected there. This is a massive ascending. We have a 3.5+ target, going on 3.6 for this. You've smashed this now. So what resists you 3 times is broken on the 4th time with real momentum. So that was your absolute entry after your pullback was relatively short. Note how the pullbacks got smaller each time after the 3 touches. That was your gift entry on the 2.7 there with your stop there, and you're right off the screen for where you want, and risk reward ratios matter. Dale, how much are you risking? Money management. I'm putting $100 into this trade. I'm putting $1,000 into this trade. This is my sizing. That's how much I'm writing the check for as my commitment to this trade. Win, lose, I'm sticking to that stop loss and that extended target. That's where you get your 9x, your 10 RRR risk rewards. And that's the basis of our trading. So you're looking at all these currencies, including a mining nation's currency that pulls the stuff out of the ground, and you're seeing it go. Then you go to the British pound that had its pension crisis. It's also new highs, ran a key level. I've left some of the draws on. 1575 was a huge one for the pound. It couldn't.
And it came back and tested it and came 100%. Off it.
Test, smash. These are key technical levels falling. Why talk about the dollar when you should be in the boss right now? And that could be a mixture of gold and Bitcoin against these trashy fiat currencies in a debt unwinding system that we've called the turn on debt, that you could have stubbornly high interest rates, weak performing debt, eventually into a jubilee if they decide to reset this thing and take us into UBIs and CBDCs. I don't want to go all rabbit hole on you, but that's a real benefit. You can be short all of that and long something they can't print at all. And this is the time that you put this trade on. I haven't even touched the energies, which was the real reason we agreed to check in. But I just want to show you gold against some miners against gold. They are fumbling at the moment, but their time will come. So first, what's
I was wondering, you know, I actually came out of my miners last week, and they're a little higher than where I got out. But the miners, with what physical gold did, they look like bear market rallies, or, you know, that there was going to be maybe a correction. Do you think that this could continue and it will take the miners down?
It's a bit like I'm looking at one of your V12 sports cars, Dale, and we're looking at the cylinders, and they have the numbers in the firing order, you know, 1, 6, 9, 3. And I'm here to tell you the order of the cylinders firing. And the key thing is you run with the gold first. I mean, I'm sitting with silver coming out of my ears. It's also underperforming relatively, although okay. You want to be gold first. The God market moves first. Everyone in initial disbelief. It's not sustainable. It goes up, it comes down. You're not going to reprice an equity just because you've had one good month in gold. What you then find is gold keeps running and keeps making new highs. And now it's looking like staying up for longer. Then people go back to their miners and say, you know what, they're starting to make real profits now. And it doesn't look like it's just one glory month. If this continues and that continues, et cetera, we need to reprice the earnings and the dividend flow we're going to get out of this equity. Then they start running. So you start to get the gold running, then you get the silver, I would say, and the miners. Sometimes the one might go, the quality miners might go a little bit before silver, or silver goes a little bit before the small cap miners. I don't want to be too picky about the order between them, but it's always the God market, inverted commas, first. So you trade gold long initially. You roll into the later stages of the bull market into the equities and silver, where you get the higher beta and the quicker gains and the multiplier.
So not here, you wouldn't own them here. The miners.
Yes. So the miners at the moment, I stay gold, and I'm knowing that they are my next step after gold has shown that it's not a flash in the pan. Yeah. People don't get too excited. One swallow not making a summer. They've had decades of underpricing these guys. They know in no hurry. They've had so many burnt hands, false dawns, Dale. They are cynical. You have to wait for that cynicism to roll right the way hell out until people look with fresh new eyes, and they're not yet ready.
I think a lot of people will be showing the Dow against gold chart. You're going to see a lot of indexes against gold charts to show that there's a trend change underway.
Here's something that's not quite what you asked for, but I can pivot to it in a minute, but I want to show you anyway, because we're talking about miners, and I put the S&P up and I'm here to show you a technical pattern that I'm expecting to see break. So let me just steal a bit more real estate so we can get the whole boy in there. So what are we looking at? Miners, XME I've chosen. Other guys can use HUI, etc. Don't get hung up on it. But you've got a massive double bottom here. And it's even a left shoulder, head and shoulder inverted. The neckline is your 0.142. So I've actually taken the miners and divided it by the SPY. And they are such a small percent, Dale, of the market cap. I mean, minnows. So you've got a huge left shoulder there. You've got a massive deep head. You've returned to the neckline, and now you're here after grinding up. We are waiting for a triggering event close. You've got a little bit knocked back on gold's coming back. Everybody said, oh, you see, we're being let down again. They're so negative on the miners, they've pulled back again. This is squeezing.
They got me to do it. Yeah.
Yes. Right. This is squeezing up and it will let go. When it does, how far does he go? And for that, I even need to reframe the chart a little bit, and it's going to get a touch disorderly there with all my Picasso-like sketches. But in actual fact, we see a complete re-rating. So just so that you know, 0.33 is still very, very small. It's not even a full percent, but you're going from a level that's 0.12. So if you, let's just say it goes to 0.36 with a little bit of overperformance before it rests a while and runs my target, that is a 3x weighting. So that can be made up in a number of ways. The S&P flatlines, gold becomes 3 times more significant. The S&P comes down by 15, 20%, and gold goes up, say, 2.5 times, and you get your 3x multiple. I think it's going to be a combination of rotation, Dale. There's too many things overvalued that have to come down, and then the miners are going to get up-rated valuation. So you could get a doubler on the miners, and you could actually have a 30% off inside other categories, particularly consumer. Retail is wrecked. The key thing about this economy at the moment is government is crowding out on expenditure. Military industrial complex is flying, and they're all close to highs. Who's the spender of last resort in that case? It's the government. Who's wrecked? The consumer. 6 months of down house prices, equity market worst year on record with bonds on record last year, and not that great this year so far. They're not feeling much wealth effect. Loss of jobs. I don't care how much the Fed says super hot labor market. No one's buying the non-farm payrolls number anymore. There's so many other measures that are showing that we flatlined a long time ago and actually started to turn down. So they are clinging to their tightening narrative, but they've just done an immense amount of QE, which is my fire extinguisher and petrol analogy, where on the one end of the fire, you're adding fuel, and on the other end, you're being seen to put the fire out. They need heat. They are providing money. So the Bitcoin and gold is already seeing that and beginning to react to that. And that is why we're seeing them run, because this is fake tightening. We've given back that 50% in a single week of the tightening, and at the same time open discount windows for lenders. That is offering new money, globally coordinated central bank policies. We already have the New World Order. They're all lepers in the leper colony. You've heard me use that phrase again, and they're all responding in the same way, and you have to kiss the chief leper to get into the colony. If you're not sick like them, you don't belong. And so we have a globalized, synchronized takedown. It is a collapse. That's my doomer message. But there are things that will go up. Military industrial complex, if you're going to hold your nose and buy them, look at BA. That is a UK, BAE, British Aerospace. It's a massive one. We see it going through the $80 mark. I can show you that chart. But then the energies. I've got to confirm that why I see retail being wrecked, and I brought you in on the energy case, and I haven't even referred to it. So let me just run to WTI and then past uranium. So one thing is, oils are the lubricants of economic activity, movement, flights, packaging, purchases, deliveries. It is, I call it the Rockefeller tax. When we had a super hot housing market in 2007, oil was $150. They could afford to skim us quite heavily. When we had the absolute collapse and the lockdowns, oil went to a single digit. So it is the thermostat that gets adjusted on consumer destruction. And I am saying to you, we are heading into a consumer destruction stage. But what I'm going to do that most people don't do, that's different, because you come to me because we do different things in 360-degree analysis, is instead of just dollar, I'm going to show you the WTI in terms of the Dixie, because the dollar's been part of the story. I'm eliminating the dollar and I'm saying, what's Western Texas Intermediate in a basket of Western currencies, which includes the pound, the euro, the Japanese yen, the Swiss franc, etc., etc. And if we have a look at that, you will see that we've had this massive broadening structure as your left shoulder, a blow-off head. And by the way, we were on that trade, right? We called that top. We said that's the top. Don't forget, we were single-digit callers. If the one thing, thank you for the heads up, you gave us an awesome intro, but the one thing we've truly been accurate on is oil. 2014, we called it a crash from 103. We called single digits in 19 in August when it was $76. And I'm coming out and I'm for the first time making a major after calling it bull up to here and saying that was your top. You failed the new high.
That was on the invasion, the high.
That's right. It was all on the war. And this war is a low tempo war. This is not blanket bombing Vietnam, B-29 shoveling just bombs and flattening cities and all of that. It's a different kind of war. It's a guerrilla trench, artillery and foot soldier war. It's not a fighter plane war. It's a lower tempo war than most typically expect. That doesn't mean I'm belittling the losses or anybody who has family engaged in it. It's horrible. All wars are horrible, but it's not that massive oil consuming, and all wars are oil consuming to a degree, but it's not what got priced in.
So you must be negative China too, Francis, because when they were reopening, that was the bull's argument for higher crude prices, which really did not materialize. So is there problems in China too as part of this?
You don't even need a problem in China. If the consumer is wrecked and not buying things, China isn't making things. That's your problem. It's inventory. Right. You know, I've just bought a Toyota where I am brand new, and I can't believe the prices I got in these diminished dollars. The guys straight off were offering me discounts. This is a premier, high reliability brand. Bought a 4x4. It's like, here's your deal. Yeah, we can't give you any more than this, but forget that list price. Here's $3 or $4 grand off, straight out the box. I mean, I didn't even bother pushing him any harder. You know, I just took it. And then I'm seeing the new cars is having such a problem. We've got subprime cars of the States everywhere. I'm sitting here in Panama at the moment. It's a close relative of the States. We get a lot of US guys here. It's the same. People are afraid about losing market share. They're sitting long stock in the supply chain. The dealers are sitting with it. They're getting one from another town, bringing it to me. I'm getting the sunroof and everything I wanted. And I'm just waiting a few extra days because it's on the other side of the bloody island. But the point is, straight out the door, a discount. So this is telling me consumers wrecked. We have triggered this neckline. And you've just had the Fed speak and you're getting an absolutely natural technical reflate. So just so these numbers mean something, we were short from around 0.74. So that's like $74. The dollar index is about 104, 105. So it's almost by dividing $75, you're going to get 0.75, a little bit off because it's slightly over 100, the dollar index. But this, Dale, is pointing to 0.38. That means an oil price in and around the $35, $40, depending what the dollar is doing to this basket of currencies on this head and shoulder. And that points to, wow, just think about that. What kind of country, what kind of economic environment are we in if oil trades $40 or $35 to you? That is the demand.
Supplies, we're not in a glut. So you're talking about complete demand destruction. And even when it comes to energy, people are going to drive less. They're not going to heat their homes as much because they can't.
There's lockdowns again. Maybe we have climate-based lockdowns. Something is being pulled that is going to see less flying, less driving, and less purchasing generally. And just to be clear, on natural gas, it went first. In December already, we were big bears on this fella. And we had people saying, you know, we at round about April or May, we were expecting the Germans to be lights out in winter. And next thing we said, no, it ain't happening. This is a head and shoulder. You're going to get a chronic reversal. You're going to trade sub 3 on natural gas. Everyone was like, you guys are foolish. It was absolutely contrary to
I wonder how many widows there were after that decline. They call it the widowmaker, right?
It was.
Francis, I want to ask something that I'm sure you're keeping in, you watch everything. I was thinking about what you said about, something having intrinsic value. And I love gold. I think that we're going to have a 2-3 year bull market. Who knows? But you know what? You can't eat gold. And grain prices have been under pressure since the war, just like oil. They've been acting a bit deflationary. And there's a weather pattern changing out here in the Pacific. We've been in La Nina, which brings rain to the breadbasket here in the U.S., shifting to El Nino, which can bring drought to the Midwest. I'm wondering if you consider food an asset class in the kind of world that we're going to be looking for, and maybe we should all buy a silo and fill it up sometime during the growing season this year. What do you think?
I think from a prepping perspective, that's very sound advice. From a trading perspective right now, it's in the middle. It's decent without being spectacular. There's better longs at the moment. Here's an example of Robusta coffee, for example, which is a grain. You're doing okay. If I have a look at something closer to what you were mentioning, we're going for oat futures. It's had a big sell-off. Again, a head and shoulder that we called. You can see, there's your head, there's your thing, bang. You smashed that neckline. And that, traded as high as 825 and you've gone as low as 325. That's a heck of a beating to take. So it is now starting to base, but it's still a little soon.
Well, I'm talking June. I'm talking in the summer, June.
Yes.
So, it could just because people may stop driving, but they're not going to stop eating. They may stop flying, but they're not going to stop eating.
They're not going to stop eating, but they do eat less, funny enough. The notion that it's a perfect defensive play in a recession is not 100% accurate. People do eat less, and they do start to self-feed and do things.
Start growing things like victory gardens and, great point. Great point.
Yes.
That's why I wanted to. That's why I brought it up to you. I knew I'd hear, something new to put in my narrative, and that's why I love your work. So, you want to wrap it with uranium, Francis?
Yes. So let's take you past the uranium because we've shown you gas, we've shown you Western Texas, which the others are very simple. While I'm passing BAESY, this is the US version. Most of your audience, by the way, Dale, is American, I understand. So I just want to tell you, this guy's going through 86 for me. And it's already is a ripper. And this is your military industrial complex.
Okay.
These are the guys with money. They're printing up the debt. They probably know they're never going to pay it back. And this is a ripper. And this ripper goes to 86 and it's sub 49 at the moment. But you could have, if you're in our community, been at 33. But no problem. It's still a great trade. But it's ripping. It's ripping. And everybody gave away their old armaments to Ukraine. They want to go 5th generation fighter or 6th generation fighter, tanks, artillery. They clear out the closet. Oh, we have donated X billion to Ukraine, keep the Russians occupied, etc., etc. That's a British one. Here's Saab, by the way. Look at these guys at all-time highs. That is also European. You look at Thales, that is in a breakout to the upside through 147. So I am showing you one other bull area as I'm working my way down to the uranium complex. So that is, I call them hold your nose trades personally. I almost feel guilty about making profits out of the warmongery. But, if it's going to go up, maybe you should take it and, make a donation towards your favorite charity or do whatever you need to do if the money's there to be made. Oh, while I pass looking for the uranium.
Plant good seed, I say. Plant good seeds.
Take the money and plant good seed. This is Lululemon Athletica. This is a classic retail trade. We're expecting, you want a big call, 309 at the moment. I'm expecting 73.50 by the time.
Is this a Chinese stock?
It is NASDAQ and it's sportswear. Lululemon Athletica. It's on the NASDAQ. Big head and shoulder, a chronic sell-off. So retail is going to get hurt out of this broadening structure on the right shoulder. Let's get to that uranium, though, because that's what we promised you. Just got to find out my order of the energies. I've got so many things we're watching right now. That's going to take us into the currencies. Uranium, Romania's after the energies. Here we come. EDV I like as a minor. Here we go. So Sprott is one of them I can pull up. Let's get some space. I think this one is better. URNM, Sprott Uranium Miners. This has done exceptionally well. Many people are big fans, and I was too, to be clear. But there's a time and there's a place. It's not a good trade right now for us. We think this comes off.
There's a lot of people on Twitter pumping uranium for a long time.
That's right, and being heroes about it. That is a grind line break with a small return move. We see this as a head and shoulders that's triggering down, much like your energies. So we've actually got a couple of energy equities. If people want to come on board or book a chat, they're welcome. The Market Sniper, you can find some of the equities that one of which has got a 70% downside, but we've got an overall oil 40% downside. So you look at your oil services companies and various others like that. There's plenty you'll find, but we have real shorts on the equity sides that we're putting on. So as I said, apart from military industrial complex, gold and Bitcoin, there's your longs and your anti-fiats and your government spending, hold your nose trades. Most things are short. We've also, for the people that like precious metals but want to be neutral, we have a platinum palladium trade that we've been put up for a long time. We've been talking about it. Essentially, you are within the platinum group when you divide platinum by palladium. And those can be trades. You can put 100 grand long on the platinum, and you can put a 100 grand short on the palladium, and you can be within the platinum group. You're even neutral, and that is done exceedingly well. Palladium did.
I mean, I remember when platinum traded $1,000 premium over gold.
100%.
Well, you think it'll ever return to that?
Dale, it's so rare. I mean, compared to gold, I don't want to speak out of turn, whether it's 8 times or 30 times. I've got confusion there, and there's obviously a big difference in those two numbers. But if you have 2 Olympic swimming pools of gold in the globe, you might have a little more than that today. Palladium, you don't even have a fraction of that. And this is the example of the platinum palladium trade, and you can't. This is actually, I've chosen bad charts because I was just doing it on the fly here. But this is a long story of descent. At one point, you needed 5.5 ounces of palladium to get a single ounce of platinum. It eventually dropped to the other way around. To 0.3 ounces of palladium to get platinum. So we call this breakout on the falling wedge and a total reversal. It's also in a macro falling wedge like this that has come to an end. So I'm sketching pretty brutally here. It's far from a Picasso, that one, but this is a turn as well. So the re-rating of platinum positively to a very, very steamy palladium that became all the rage. You can see this structure if I just take it on its own.
I remember when it was $50.
That's right. That's right. It was a $50.
I don't know how long ago that was, but
and it traded 3,400.
Further than the charts, huh?
It traded $3,400. So that was absolutely giddiness here. They were using it as a substitute for platinum, and this is turning over. This looks ugly. So this is one precious metal not to have. Trade the gold, your God market. This is one not to have that you could even do a gold palladium if you prefer, if you think gold's going to be the early runner, but you're still within the precious metal comp. You could make money on both sides, and you'll be naturally more hedged in the up and downs of Fed speak and various bond and bank failures, where you're probably going to get some volatility. You'll reduce vol and you'll have a very good hedge. So
can you show your website now, Francis? Can you put 100%. It up there?
Yep, indeed. You're looking for the 3 W's, the Market Sniper. Book a call or follow for a while on our YouTube, under the Market Sniper on YouTube. But this is the website. You know you've come to the right place. Don't engage any other way. There are a lot of cloney type things going on there. Go straight to the website. Book a free call. You can see we've done live events. Have a look at the results. By the way, on the oil, we've done a macro, and I will share the link with you. From 2014, the calls right the way through the COVID calls, the individual carnival shorts on cruise liners, which should have actually gone up with the oil price going down, how we actually got the script of COVID before we even knew it was COVID. And that was by trusting the technicals. We shorted a pipeline, Plains All American. We shorted cruise liners, and we didn't even know why. We just did it, and we just could see this big collapse coming. And I'm essentially saying something pretty strong, but not to the same degree is coming. I could see up to 40% from the $75 mark. We've already given up a little bit. We had 67, but you can trade sub 40 from 67. That's still quite a substantial slipping in the commodity. And the reason it's not going to go as low as the hyper stagflationary. So yeah, book a call. The button's there. It's absolutely free. There's no obligation. And we give 14 days. Have your money back. No questions asked if you join our community.
Well, as you guys can see, and ladies, you know why the market sniper does not need a spotter, because he's one of the best at putting together the complexity of a financial jigsaw puzzle that I speak to. And it's not a simple jigsaw puzzle. It's got thousands of pieces. And can you imagine the time that goes into that, let alone the thinking and insights? So Francis, really enlightening interview for me. Every time I talk to you, I learn from you, and I've been around a while, and I still learn from you and appreciate you coming here to TradeGate Hub and edifying our community. I hope you have a great spring trading season, and look forward to talking to you down the line again, buddy.
Absolute pleasure. Thanks for having me on, and safe trading out there to all your guys.
My trading warrior brother, Francis Hunt, at the Market Sniper. Thank you, Francis.